Welcome to the D-Shift podcast, where we provide inspiration, motivation, and education to help you transition from the challenges of divorce to discover the freedom and ability to live life on your own terms. Are you ready? Let's get this shift started. Hello, and welcome to this episode of the D-Shift podcast. And as always, we're going to be talking to an expert today who helps people really get clear on all of the financial issues that impact families. And I want to introduce you to Bill Walters. He is a financial professional and founder of Perfectly Imperfect Families. I love that. I love the name of your business. He works with individuals, families, and business owners to bring clarity to complex and difficult financial issues around retirement planning, tax advantage strategies, and long-term financial protection for yourself, your kids, and anybody else in your life. So, Bill, welcome. Like I said, I'm so happy to have you on the podcast today.
Thank you so much. It's a true blessing to be here and to engage with people and help them improve what they already have.
Yeah. And I always tell people on the podcast, off the podcast, clients I work with, knowledge is power. And the more understanding we have, even though we're not going to ever reach expert status like somebody like yourself, but to have general knowledge so you know what questions to talk to professionals about is even a real gift to have when you're going through any kind of financial planning. So before we get into all the good stuff, Bill, tell us a little bit about why this is your area of focus and passion.
You know, it's sort of like a twofold story. So, my mom, my aunt, and uncle were all involved in the world of accounting. And so I go to school at Drexel University, and I'm on my first co-op doing accounting. And I realized, it's just numbers and not enough interaction with people, not helping people. And so I said, well, what can I do where I'm helping people and I'm interacting with them on a daily basis or a monthly basis or an annual basis where I'm making a true difference? Because no one gets really excited about having a bank reconciliation done, right?
Right.
So I'm like, financial professional, helping people get their dreams, goals, and desires organized and prepared. That sounds cool. And that's exactly what I went into.
Yeah. And so this is what I find, especially with a lot of people that are in the divorce field, I'm just going to call it that, is that
right.
It really comes from a sense of wanting to help people and wanting to make sure that mistakes and issues and common misconceptions are not something that ends up haunting you after you complete this part of your life, because there are some big long-term financial considerations to keep in mind.
Yes. So I am a product of a divorce and we're amicable, but the unique situation is at the time of the divorce, the attorneys were not engaged in standard behaviors, meaning that they were trying to do what's best for the client, but the pawns in the situation were the children. And they didn't take into consideration, even at my level, what the proper amount of, if something happened, insurance, if something happened to me or my ex-wife, how our lives would be impacted. Now, thank God that neither of us passed or had anything bad happen to us, and we have a good line of communication now. But in that time, it was said to us that we both had to maintain a $250,000 term policy, but they weren't going to follow up with us. So as long as you did it initially, you could cancel it and they weren't going to penalize you. There's no penalty clause. And so I asked the judge, I'm like, well, if I pass and the kids need to go to college and they need to, wherever mom is living needs to be paid off and her car needs to be paid off, and what's their food going to cost? And she's going to need extra help because they were young at the time for preschool and after school because she's got to work now.
Right.
and you take all those considerations in, that's not $250,000. That's more like $2.1 million for 21 years until that time frame comes where they're no longer needed, including college education. So why do boilerplate when you can do the right way and do a discovery
Yeah.
and say this is what the amount should be on both sides?
Right. Right.
And now it's equal, right? So that everyone's protected.
Yeah, and I really appreciate you saying that, Bill. Let's back this up just in case some people are new or just getting into the process. Let's talk about this idea of of insurance during the divorce. Can you tell us why that is important to have written into your settlement, and then go into a little bit about how it's often determined and how you think is a better way to do it?
So why it's important? Because the children, if you don't have children, the wife or husband are accustomed to a certain lifestyle, and you want to keep regular as regular, whatever regular looks like. And so once you figure out the basic necessities and what that cost should be, and you then prorate that over the number of years, like if it's a child, and you want to go through college, what that looks like as far as protection, it comes up with a number, including college being paid for, and a car for the kid, and a car for your ex-wife, and things like that to pay it off. You're not saying that you're paying for hair, nails, makeup, manicure, massage therapist, tennis instructions. We're not doing that. We're just doing basic necessities of life. What does food cost? What does it cost to have car insurance? What does it cost for home living? And
Right.
we're not saying also living in the Hamptons. We're just saying a general house.
Right.
Right. So the kids didn't ask to be put into the situation. So you want to provide a barrier of protection
Right.
and normalcy, as much as normalcy as you can add. So God forbid something happens to you or her, that they're covered.
Right. Right.
And out of the kindness of your heart, right? So,
yeah, and it's really a cushion that is put in there because all divorce decrees are, well, everyone I've ever seen or heard of, basically, if the person paying dies, everything stops. There's no spousal support. There's no child support. It stops at that point. Now, sometimes child support is dealt with in other ways, but that insurance policy then would kick in, and the beneficiary would be listed as the spouse because the kids would probably still be minors at that time. And then that then serves as that lump sum payment that would come to them in the event that the paying spouse passes away.
yeah, but there's a better way to do that. You can form a trust.
Sure.
And inside the trust, you can create an executor, and you can, inside that executor's operational duties, have money allocated for specific things. So it doesn't get under the skin of the other person, so that this money is allocated for clothes, shoes for the children, getting their haircuts instead of putting a bowl on their head, keeping them active in activities like, sports, gymnastics, swimming, whatever it is that they do, vacations, and it's allotted for that.
Right.
Okay. And then we know that it's important to have food and shelter incorporated into it. So what is your monthly mortgage rate or your monthly rental? Good, it's covered. What is the food bill per week? Oh, it's $200 a week for the kids. Great. So now it's all covered.
Right.
It's not for incidentals. It's not for things it's for the basic necessities, so that it doesn't ruffle the feathers of anyone. And for people in relationships that are caustic, toxic, and argumentative, it eliminates all the arguments because it delineates everything line item by line item, and everybody's happy.
Right. That idea of trust is something we haven't really talked about and on the show. And it is a really good, and there's different kinds of trust, and they have different, if I'm not mistaken, they have different kind of tax benefits that you might want to consider in setting them up. And there's all really unique and creative things. But you're right, that doesn't typically come up unless the client asks for something like that.
Correct. And it's it's not about getting one over on the other person, because in the end, you're still going to be co-parenting for the rest of your life. So it's not that situation whatsoever.
Right.
What it's about is creating an environment that's conducive to the best mental health of everyone.
Yes.
And so that everyone can move forward in a positive way and grow.
Yes. Yeah, I completely agree. And they are typically set up to provide that financial security for the surviving parent to be able to take care of the children, or for the parent to be able to take care of the kids. And you're right, it's not a standard number for every family.
Correct. So that's where a financial professional would be highly recommended, because that's their area of expertise. And I'm not saying someone that works for a stock brokerage. That's not what I'm saying. I'm talking about a professional. And I'm not saying a fiduciary, because they all make money on the situation. Okay. What I'm saying is someone that's a financial professional who has the best interest of the client in hand, that has nothing to do with their commissions. It has everything to do with doing what's right from Jump Street.
Yeah.
And caring, and having this thing called a conversation, not a text message exchange, not a Zoom meeting for 30 seconds, but an actual conversation to find out what makes this person tick and what's important to them, and then providing that protection for them long term.
Yes. And then what a heart-centered approach to that. And that's so different than what you do experience as a person calling around to different professionals and seeing if they're a good match for you. I know one of the things that you talk a lot about is, how do you have those conversations, and how do you clarify, let's say as a client who's new to this, how do you even know what questions to ask somebody about this very important part of your financial future and your children's financial future?
I think you have to put yourself in their shoes, the best of your ability, and find out what's important to them first. What are they trying to accomplish? Are they trying to accomplish a nest egg at the end of the day and the end of their work period so they can retire and live their years truly golden? Or do they just want enough to pay all their bills and take their 2.1 vacations a year and spoil the grandkids? Like, what is their end game goal, right? And leave a legacy. So for people involved, this is more about you than me, and that creative thought process of what's really important and creating a roadmap on how do we get there is imperative. And how do you want that money coming to you? Because the monies that come to you, wake up, America, taxes are going up this year by 8% across the board. Makes me choke.
I know.
8%, right? So, unless you make $350,000 a year or more. So, if you make less than that, your taxes are going up. If you're making more than that, your taxes are going down. So, what do we have to do so that your silent partner in savings, Uncle Sam, doesn't get more than their fair share?
Yeah.
And it's teaching people how to retire tax-free, not using a Roth, and how to grow your money tax-deferred that has a built-in floor that prevents you from experiencing market losses. And that's why when you deal with an advisor that is stock market based, that doesn't happen. Because when you have a loss, you experience the loss, and they say, oh, it'll rebound. But it's your money.
Right.
And why should you experience a loss if you know a loss is going to happen? Why not have a built-in floor that prevents losses so it doesn't happen? And you can put your head on the pillow and say, my money is safe. It's always going to grow positive or stay positive. And when the market course corrects and rebounds, which it usually does, you just get the growth, but you never experience the loss.
And so it sounds like, let's say you're reaching the age where you're starting to seriously think about retirement, whatever that might be for you. For some people that might be 30, for some people that might be 50, hopefully not later than 50, right? But let's say people are doing this. Should they have a clear idea of what they want their future to look like before they come and talk to you? Or are you able to help them kind of clarify that?
I think the best way to answer to that is to figure out some basic questions like, when do you want to retire? At what age? Where you want to retire? And how much do you want to retire with?
Okay.
Now, they could wait till they come to me and we can walk through it. It doesn't matter how many sessions it takes. What matters is they get educated.
Right.
And they have two options when they meet with me. They can be coached, okay, meaning that I become their financial coach, and they can have as many sessions as they want because they're paying for the coaching on certain topics like credit card reduction and savings and budgeting, or they can become a potential client where we meet and we show them strategies in the future and what it looks like based on their savings and their goals. Right. And that doesn't prohibit them that if they do a year's worth of coaching and they finally are organized and they're ready to move in, well, they already know, like, and trust me at that point.
Right. Right.
So then it's a natural transfer to, all right, you're no longer my coach, you're now my financial professional who's going to now take it and make my money work for me.
Yeah. And I think that's a really, you touched on something that I think is so important. If you're going to be turning over your money to somebody, you want it to be somebody that you have that know, like, and trust, that you have worked with, or that at least you walk in and you go, man, I talk to Bill every time he steers me in the right direction. He's been upfront and he's been honest with me, and I just feel really comfortable. And I think that makes the difference between having that great working relationship with your financial professional, or getting your information from your financial professional and then checking it out with ChatGPT or Googling it or whatever to see, that's time consuming, and you should be working with professionals you really trust.
Yeah. So the difference really is that I'm only a phone call away, and I'm not charging you a management fee or account rebalancing fee or a maintenance fee, right? So my interest is to make sure that we're making the best interest for you long term.
Right.
And your goals. Do you want to accumulate money tax free? Do you want to accumulate money tax deferred that doubles every 10 years? Do you want to get long-term care protection so you're not a burden to your children at pennies on the dollar, as opposed to paying $400 a month that you may or may not use that actual strategy?
Right. Right.
And these are things that you want to review with your professional so that they walk you through an education process and they do what's best for you. A unique concept in the world that you do what's best for the person in front of you.
Right. And this is really eye-opening, because there are so many different, maybe I'm not using the right term in your industry, but there's so many different types of financial professionals. And I've heard this term, or I've heard my clients talk about this quite a bit. Post-divorce, they get the money, they've got everything going, and now they're almost paralyzed with, what do I do now? And so they don't do anything. And it just sits there in a savings account or somewhere. And but there's a real fear that I'm going to get messed over in my money, especially, and I'm going to say this is stereotypical, but a lot of times when women, particularly my age and older, who have maybe not been involved in the finances at all in the family, and now they're single and on their own, it's really scary to have this responsibility, but also, like you said, to know, hey, the stock market, I could lose everything tomorrow, which doesn't really happen. I get that, but you know what I mean? It's a real fear that people have.
I think it has to do with, you've just been burnt. You're talking about females. You've just been burnt by a male, and possibly a male attorney or a barracuda, right? That is going after you, and you just are trying to survive and get out. And that's why the education process is so important. And you could put the person in charge of their own future and also protect them at the same time, where they're in control. I never take checks. Okay. I never take personal possession of the money. It always is done professionally through the organization, right? And in this case, Transamerica, right? But it's always done that way so that it's not a Ponzi scheme. It's not a fly by night. It's not an EFT that is not backed. So um, it's it's there so that the person can relax
Yeah.
and allow their money to work for them, okay, and not have to worry anymore. And when you work with an organization that is a Fortune 50 company and has excess of billions in their coffers and they're fiscally sound, you can look at it 24/7. It's there,
Right.
right? You don't have
Yeah.
to worry.
Yeah.
And that's the key to this is trusting in yourself, loving on yourself, and creating a positive mindset towards the receivership of said monies. Okay. If you are nervous, the money is going to nervously disappear and dissipate. But if you have a positive mindset around it and you put yourself forward in a way out of light and love, it no longer becomes who you're identified with. It becomes a avenue for you to get joy and create memories from.
Yes. And you know what? You have hit on something that is so important. It's that whole mindset, that whole energy of money. And what does it mean? I was in a group. I don't know if you've ever done this. I'm sure you have, but where there was a group of, I think there was 15 or 16 people. And the presenter said, just quick, the first word that comes to your mind when I say money. And it was so interesting going around the room because some people had really negative connotations like greed and debt and ruin. And other people were like freedom and joy and charity. And it was so interesting how one simple word had so many different meanings to people.
Yes. And, most people, you said the word greed because people associate that word and it's not, it's opportunity.
Yeah.
Right.
Yeah.
And so who do you get to serve with that? Do you get to serve family, children, the less fortunate, yourself? Self-care is a hot topic word that really didn't come into its own until after 9/11. And now if you look up self-care hashtag or hashtag in front of it, there's all these ways to do self-care, right? And not one of them has anything to do with being fiscally sound and being a good steward with your money, right? And that is the basis of it.
Yes.
If you're fiscally sound and you're a good steward, it will grow and you're protected. So then you could lower your DEFCON to DEFCON 1 and just relax.
Yeah.
And allow life to come to you and for you to experience and enjoy it and have fun, because the trauma after a divorce, sometimes it takes years.
Mm-hmm.
And sometimes when you reconnect or you try to have a blended family, the rules are that it takes upwards of 7 years for that blended family to be joined and operate efficiently where there's no antagonism
Right.
and no tension, walking on eggshells. So that's a long time, right? And so there's a lot of moving parts. So no one said this was easy.
Right.
Okay. And no one said that there's one right way or a magic pill. But what I can offer people is an opportunity to have mental clarity and the ability to relax and not to worry anymore. Right.
Yeah.
And have a relationship where I'm a phone call away and I can answer the simplest questions like, do I buy this refrigerator or do I put it on a 0% credit card and pay it off in 60 months? What do I do? Like those questions I answer.
Right. Right.
Based on their circumstances on day-to-day life questions. Do I put this into a high yield interest account because I'm going to need it in 6 months? Or do I invest it into something that is going to pay dividends in 10 years? What do I do, Bill?
Right.
And I answer, well, this is the pros and cons. We do a Ben Franklin chart. If you don't know what that is, it's yes, the pros and cons, yellow piece of paper, split down the middle, and you'll see your answer in front of you as you write down there's 7 yeses and there's 2 nos.
Yeah.
I guess I'm going with the yes.
Absolutely. Bill, you have shared, thank you for this absolutely fantastic conversation. And let me ask you, of everything you've talked about today, what do you think is the takeaway you want people to remember?
You are perfect in God's eyes, and that you're special and you're put on the earth to accomplish something. And no one's here to judge you. And it's okay to need support and help. And in this case, with financial help, I'm here to help you achieve abundance and prosperity and mental clarity every step of the way. And I want to be your friend.
Yeah.
And enjoy the ride, right?
Yeah.
And so share with me your worries and concerns, and we put them to rest.
Thank you. What a great way, what a positive and uplifting note to leave this on. Bill, if people are interested in reaching out and working with you and finding out more about you, what's the best way to do that?
Well, you see on my screen that I have a little QR code. They could click on that.
Right.
My company is Perfectly Imperfect Families.com. And I'm not afraid to give out my cell phone, which is 267-278-5062. And you could book on my website or book through the QR code up here, just to have a non-obligatory initial consultation.
Wonderful. Okay? Yeah. Thank you. And I've got all that information that's going to be in the show notes. So if you're listening to this on a podcast, you can't see the screen, don't panic. It's all in the show notes, and it will also be on YouTube. So check out the channel over there, and then you can see Bill and you can click on his QR code with your camera. So thank you, Bill, for being here. And really, this has been a really interesting conversation. Thanks for sharing all your information.
Well, thank you for being such a kind and generous and uplifting host.
Well, thank you. And thank you, everyone, for listening in to this episode of the D-Shift podcast. And don't forget to tune in to the next one. Thanks for listening and supporting the D-Shift podcast. If you would like to attend live trainings by our amazing guests and have a chance to ask questions and get answers from our experts, join the D-Shift crew. For more details and to sign up, head on over to www.divorcecoachforwomen and click on the podcast page.